Living on a fixed income has at least one benefit. It's simple to project how much money you'll have each month when most of your income comes from Social Security, brokerage retirement accounts, or pensions. The drawback: pay payments might become more challenging if unanticipated expenses or inflation-related cost increases occur. Living on a limited income can be difficult, but planning and keeping a tight budget can help. Hello guys, welcome back to the channel. If you are stuck with a fixed income, this video is for you, but expenses exceed the limit. We are here to discuss the essential budgeting tricks to simplify your life. So, stick with us until the end to know it all. Subscribe to the channel for more informative videos. Let's get started. Although it may seem odd, having a fixed income does not guarantee that it will always be the same. Additionally, you may get money from several sources, making it more challenging to keep track of your monthly revenue. It would be best if you familiarized yourself with all of your sources of revenue to ensure you know exactly how much to expect each month. While considering any fluctuations, keep track of any income that fluctuates from month to month, such as investment income. Number 1. Understand your income. Prior to drafting a feasible fixed income budget, ascertain your specific financial situation. The easiest step ought to be this one. It's simpler if you utilize budget software, as you must enter the data once, and the program takes care of the rest. All fixed, consistent income sources, including Social Security and pension benefits, are totaled. This enables you to project your revenue reasonably for the coming weeks, months, and years. It's an advantage available to those with a fixed income. Important note: just so you know, if you're feeling overwhelmed when it comes to making a budget, a financial consultant may provide professional guidance on managing your finances and continue living the way you do without going over budget. Number 2. Make an inventory of expenses. Make a thorough inventory of your costs once you know how much money you can rely on. Start with your most significant fixed bills, which include your rent, health insurance, and auto payments. Next, assess your monthly spending on variable costs like food, prescription drugs, and entertainment. Remember to account for tax responsibilities, which may stay constant or change yearly, depending on your tax liabilities. Once all of your fixed and variable expenditures have been covered, divide the remaining costs between those necessary and those not. Diverse viewpoints exist on the definition of essential. For example, you could believe that certain entertainment expenses are necessary for your mental well-being, but someone else would view them as a luxury. Evaluate your requirements versus wants using your best judgment. It doesn't imply you have to eliminate all non-essential spending from your spending plan. Just recognize them for what they are and adjust as needed. Number 3. Create an accessible emergency fund. It makes sense to cease saving after retirement and to enjoy the rewards of your hard work, since most seniors spend their whole working life saving and making plans for their retirement. But when living on a limited income, you never know when a big bill may come up and upset your whole budget. You should always have emergency money on hand in case anything unexpected happens. Did you know? You may open a high-yield savings account with your present bank or an internet bank in only a few minutes. One of the most excellent methods to save money that can increase over time is to put it in a savings account. While a savings account won't provide the same level of profits as other investments, it will always be available. That's crucial since you never know when you might need to take out cash quickly due to an emergency. Your emergency cash should be placed in something other than investments or accounts that are hard to access quickly. Number 4. Create a budget. After determining your monthly spending, you can create a budget in a few different ways. With the 50-30-20 budgeting approach, you set aside 50% of your income for savings, 30% for discretionary spending, and 20% for necessities. Do you want to simplify things even more? Consider the 70-30 approach, which calls for saving 30% of your income and living on 70%. Are you curious about where each cent goes? Try making a budget using zeros. With this budgeting method, each dollar is given a job to have your income and expenses equal to zero. Having savings gives you a much-needed buffer when your income is fixed. Set aside funds for unforeseen costs and significant objectives, such as travel. After you've made a budget, monitor your income and spending to evaluate how it's doing and make any required corrections. Keeping a journal of your earnings and outlays in a notebook or on a blank calendar will suffice. On the other hand, applications for budgeting and online banking can streamline the procedure and lower the risk of mistakes. Instead of waiting for a paper statement to arrive in the mail, you can always view your income, expenses, and account balances. Connected to your bank account, budgeting applications may show your spending in many categories and update your balance in real time, making it easy to see where and when you're overpaying. Keep yourself on track by doing a brief weekly evaluation of your spending. Fun fact time. Did you know that budgeting can help alleviate financial stress by controlling your money and reducing the fear of unexpected expenses? Number 5. Reduce your rental expenses. Hold real estate? Your property taxes are likely rising. Depending on where you reside, you could be eligible for relief from property taxes. The website of the King County Assessor states that just 1 out of every 100 elderly and disabled people who qualify are enrolled at this time. Renters continue to feel the pinch of taxes while their rent increases. Look into getting a roommate if you don't already have one. Finding a roommate is a good way for some BECU members to cut their monthly expenditures. If getting a roommate is out of the question, consider relocating to a more reasonably priced area. Consider the expense of commuting to work and other commitments, and determine if they will outweigh the rent savings. Number 6. Re-examine your transportation needs. Suppose you have commitments that need a car. In that case, there are many methods to save expenditures by lowering your transportation costs. Buying a less costly car altogether to avoid a car payment, switching from a fuel guzzler to a fuel-efficient vehicle, choosing to use a car-sharing program. It's also a good idea to take your time looking around for vehicle insurance. Are you still getting the best deal possible for the appropriate level of coverage? Find out what practical solutions there are for public transit. You can sell your car and use the proceeds to buy a bicycle as part of your transition. Save every dollar to afford additional necessities and stay within your budget. Number 7. Control your medical expenses. Preventive care is the greatest strategy to reduce medical expenses. Preventive care, such as routine checkups and adherence to prescribed treatments, can save hundreds or even thousands of dollars. Speaking with your healthcare practitioner as soon as possible is crucial. Additionally, there are some unconventional methods to save money. Schedule dental appointments at a renowned dentistry school. Get vaccinated against the flu well before the winter. Fill prescriptions at bulk warehouse clubs, where frequently there is no cost associated with using their pharmacy service. Number 8. Be extremely careful with debt. The extent to which senior citizens should be worried about repaying high-interest debt is a topic of much discussion. If you cannot pay your bills, Social Security benefits are shielded from wage garnishment. Additionally, several jurisdictions shield retirement investment funds, such as IRAs, from debt collectors. Because of this, some financial advisors advise senior citizens to avoid putting off debt before meeting necessities like food and medicine. For the record, interest rates on credit cards are sometimes far higher than those on personal loans or mortgages. If you're having trouble paying off your credit card debt, consider getting a low-interest debt consolidation loan to lessen your financial load. but it doesn't imply you can accumulate credit card debt in retirement and hope for the best. Homes and cars are unprotected assets that debt collectors may still pursue. On a fixed income, taking on additional debt will make it more and more challenging to pay your payments. Therefore, you should avoid doing so as much as possible. Before we end this video, I have a bonus information for you. A few budgeting tips to ensure you are fully ready to take on this challenge. Number 9. Budgeting tips. Differentiate between essentials and luxury. Eating is necessary. A 4-star restaurant is a place of luxury. If you must reduce spending, cut back on luxury. Number 1. Prioritize essentials. Ensure your budget covers essential expenses, such as housing, utilities, groceries, transportation, and debt payments. These should be your top priorities. Number 2. Track your spending. Monitor your spending regularly. Keep a record of every expense, whether a small purchase or a monthly bill. There are many budgeting apps and tools available that can help simplify this process. Number 3. Adjust and stay flexible. Life is unpredictable, so your budget should be flexible. If you overspend in one category, adjust by cutting back in another. Regularly review and update your budget to accommodate changes in your income or expenses. By following these tips and consistently practicing good budgeting habits, you can take control of your finances, work toward your financial goals, and build a more secure financial future. As we wrap up this video on mastering your finances on a fixed monthly income, we hope you found it informative and inspiring. Remember, financial freedom is within reach, no matter your income level. If you found this content helpful, please don't forget to hit that like button and subscribe to our channel for more valuable insights on personal finance, budgeting, and wealth management.